Hi there traders, this is Steve Miley for FX Explained with one of our regular weekly MacroWatch updates for the week commencing the 18th of January 2021. 2021 risk-off theme stalls despite US fiscal stimulus statement. So first of all, let's kick off with the macroeconomic and geopolitical developments that we've seen in here over the past week. Well, first of all, we've had Joe Biden announce his $1.9 trillion fiscal stimulus package, but markets kind of dipped on that, and we'll look at this shortly in here. A bit of buy the rumor, sell the fact going on in here, and also some disappointment maybe on some of the measures not going quite as far as the upper limits of what the market may have expected, and full anticipation that this is probably going to be watered down from this $1.9 trillion package that has originally been put in place, or proposed, should I say, by Joe Biden in here. So markets are reacting negatively to that. Democrats did pass an article for impeachment through the House of Representatives, impeaching Donald Trump, President Trump in here, the first president to be impeached twice, and this time for incitement of insurrection with regards to the storming and rioting at the Capitol building the previous week. So we have that now potentially moving on to the Senate, but the timeline on that as yet unknown. Here's Jerome Powell of the Fed, and we had various Fed speakers up last week, and they kind of tried to allay market concerns of a potential tapering, removing the very easy monetary policy and monetary stimulus that is currently in place. Markets in here, as we know in here, after the blue sweep move in US yields towards higher yields in here, on the prospect of a strong fiscal stimulus package, those higher yield moves also reflecting potential of a tapering of the current QE and the current stimulus package in place by the Fed. And the Fed very quick in here, Fed speakers last week quick to say that they have no intention of doing that as of yet. Elsewhere, if we move across from the US to Europe in here, we've had in here political turmoil in both the Netherlands and in Italy in here, governmental issues, and potentially the Netherlands government in here collapsing, and potentially some further turmoil in Italy. All of that negative for the EU area. We also have in here in Europe lockdown measures potentially going to be strengthened in many places, particularly Germany saying that they may go down to an even fuller lockdown. And that's obviously has a negative impact. And there are also concerns, particularly in Europe as well, that the vaccine rollouts are going relatively slow, not going at a pace that might have been expected. So some concerns around that as well. Whilst in the UK, the vaccine programme is moving ahead at a strong pace in here, and the UK doing relatively well, but particularly compared to their European counterparts in rolling out the current vaccine programme. However, Boris Johnson is under threat, internal pressures from the Conservative Party to give a roadmap out of the current lockdown that is going on in the UK. So some internal pressures on the Prime Minister at the moment from the Conservatives. The Bank of England Governor Bailey did indicate last week also a less dovish tone, talking the markets of negative interest rates resurfacing again around the end of last year, beginning of this year. And then what we're seeing is the Bank of England Governor Bailey last week saying the negative interest rates probably less likely the market are anticipating, certainly striking a less dovish tone, which has helped the pound, which we'll look at shortly. So let's take a look at those global financial market developments from the end of last week, weekend in the 15th of January 2021. Well, equity markets dipped lower. So that was that buy the rumor, sell the fact. The Biden bounce through November, December. Then we got that blue sweep bounce and extension at the beginning of 2021 in here. But then the end of last week, Thursday through Friday, markets, the S&P 500, Dow Jones, in fact, global equity markets all dipping lower Thursday through Friday as markets refocused away from the fiscal stimulus and started to look at potential for these more significant cases of COVID that are spreading globally, particularly Europe and in the US. So we're seeing a setback from the record highs. And also here on the DAX in here, having hit a record high early in 2021 and then been in consolidation for much of last week, we saw a significant setback at the very end of last week. And on the back of that as well, we've seen, and on those Fed speakers in here, having that shoot up higher into higher yields across the US Treasury curve, US 10-year yields blasting through the 1% level. We've had a slight lower yield correction in here over the past week, reinforced again on Friday. On the back of that, however, the US dollar has continued to rebound, even despite the move back to lower yields. Yield differential still favouring the dollar, and also the fact that we've gone slightly more into a risk-off theme in here. That risk-off theme has seen the US dollar benefit as a safe haven. So the US dollar rebound from the beginning of the year continuing to gather steam with a strong close for the dollar index here back on Friday. And then elsewhere that's being reflected euro losses and also US dollar rebounding here, weighing on the euro. So those negative political implications, the concerns around lockdowns, the concerns around the vaccination program in Europe, weighing on the euro, and the dollar rallying because of both rate differentials, but also in here because of the movement back to a risk-off theme in here. So EUR USD notably lower in here since the positive start to the beginning of this year. And then the risk currencies also correcting lower. New Zealand dollar here, significant sell-off on Friday, having dipped lower earlier in January. And similar story if we go and look at Australian and Canadian dollars. The risk currencies in here correcting lower against the US dollar, in many instances from multi-year highs. But the pound has hung in here. We did get a slight dip lower for pound dollar in here at the very end of last week. But prior to that, on Thursday, the pound had made another new multi-year high in here for the pound. So pound strength stays to the fore, partially helped in here by those Bank of England Governor Bailey comments in here, striking a slightly less dovish, so de facto more hawkish tone. Oil dipped on Friday, having again moved to a multi-month high on the price of oil in here, up to just short of $54, setting back from there on Friday with stock averages in here, as we had a bit of that buy the rumour, sell the fact going on. And a similar story in here, copper in here setting back Friday, having already set back from the beginning of the year. So copper unable to build on early 2021 gains that again took us to multi-year highs. And the gold future in here stays very vulnerable, unable to rebound last week, having had that significant plunge lower in here right at the beginning of 2021, for early 2021, as the US dollar strengthened, and that US dollar strength leaving gold vulnerable as we go through mid-month in here. So let's take a look at the week ahead, the week commencing the 18th of January. What do we have coming up? Well, Monday is the US Martin Luther King holiday, Monday the 18th of January. All US markets are closed on Monday. Moving further into the week, though, political events will be monitored in the US with the inauguration of President-elect Biden on Wednesday the 20th of January. We're going to continue to monitor for new lockdown announcements, particularly potentially out of Europe in here as we go into this week. And also, as ever, watching for those COVID-19 cases, hospitalizations and deaths staying very much in the spotlight throughout the planet, but particularly with a focus on Europe and the US. We're still watching for further vaccine rollouts announcements. Are we going to gather pace in Europe? It's going to be interesting to see how Europe reacts in here, and will they continue? And also, as Biden takes office, Biden looking to roll out the vaccination program and accelerate that program in the United States. On the central bank side, we have a really busy week in here. We have the PBOC, the People's Bank of China, the Bank of Canada. We have the Bank of Japan, and also the ECB, all coming this week in here. So we'll be watching all of those for any hints in here of continued easy monetary policy or potentially a move slightly away from that. On the earnings front in here, we have the earnings season really kicking off now. Started really in earnest last week on Friday, but we have the financials continuing and US earnings season really coming to the fore in here now as we go into this next week. Bank of America, Netflix, Goldman Sachs, Procter & Gamble, United Healthcare, Morgan Stanley, Intel and IBM amongst those major companies reporting in the coming week. So on the data front, we have Chinese industrial production, unemployment, retail sales and GDP all on Monday. Eurogroup meetings also, and there's that US holiday, Martin Luther King holiday on Monday, all US markets closed. Tuesday brings the ECOFIN meetings alongside European and German ZEW economic sentiment, plus German CPI. Wednesday, the first of the central banks, the PBOC, People's Bank of China. We have their interest rate decision and statement. UK inflation data, including CPI. And then we had the Bank of Canada interest rate decision also. And don't forget, probably importantly, I'm going to be monitoring this, particularly, sadly on the front is there's going to be any kind of violence involved in here with the inauguration of US President-elect Joe Biden. It's the EU Leaders Summit on Thursday, Australian employment report also, and then we get two central banks in play, the Bank of Japan and ECB, both Thursday, and US weekly jobless claims data as ever on Thursday. And then we finish off the week on Friday with Australian retail sales and UK retail sales as well, and then those all important much-watched global market flash PMI data. I'm going to wish you all a great trading week. Please do stay safe out there, and we'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.